What do you think the common financial mistakes that small business owners make? Today we're sitting down with Laurie Chen, who is a founder of AdvancedCFO, and she's also the host of the podcast Built by Margin. And she shares about the common financial struggles that small business owners need to watch out for. Tune into the episode to see if you're also stuck in the common mistakes and see how you can change the trajectory of your business today. Let's jump into the episode.
Today, I want to focus on creating a relationship with numbers. Because most times people begin with an excitement of an idea, they start, they realize they're quickly out of money. And so could we just start off, you have such a depth of experience. What are the common mistakes that entrepreneurs, founders deal with numbers when it comes to building a sustainable business?
I think the biggest challenge for new entrepreneurs and business owners is forecasting. They don't have a good business plan in place, and so therefore they don't have a good forecast of particularly their cash flow and also their profit and loss. And those are two very different things. So cash flow is more focused on balance sheet. What are my assets at any given point in time? And so if you're running a small business or a startup, you have to forecast your cash out, possibly daily, weekly, monthly. So for a lot of businesses that I've worked with, we've had to go all the way down to the day. Like how much cash are they going to collect from revenue from their Stripe processors, down to when is that next vendor expense going to hit? Because sometimes you're paying $20,000 up front for like a software subscription, right? Sometimes you're paying only $9 a month, but it's all going to hit at predictable times. And so you've got to have enough cash in the door to fund all of those expenditures. And so some startups, we look all the way to the day. Some startups, we only look on a monthly basis, which is a little bit more stable. But it really varies depending on how the business is structured and how much cash they have going in and out on a daily basis.
So I wonder, Laurie, since you deal with, people are coming to you saying, Laurie, like how can I save first in taxes, but then as you start to unravel their business model, I bet you some founders don't even know that they have been cash negative and they're actually on a downfall. And then when you actually pinpoint out the numbers, they're like, oh my goodness, like you're right. And so when founders come to you with these problems, aside from the tax savings and tax strategies, what are some of the things that you, questions that you ask them to sort of qualify to see if they should focus on their daily cash flow, weekly or monthly?
It really depends on what their revenue looks like. Like, is their revenue coming in on a daily basis, like from the payment processor like Stripe? Or is the money coming in as the customers pay them, like as they collect their receivables, right? So I find that for the companies that rely on the payment processors, then you want to model it out by the day. But if the company is dependent on monthly collection of accounts receivable from their customers, let's say they have a bunch of retainer clients and monthly contracts, then you want to look at it more from a monthly basis, right? And based on when you actually expect to collect from that customer every month.
So does that usually mean you have can I say it's a hard conversation to be like, sometimes it's like having a conversation with my young, 5-year-old James, like there are rules set in place and there are rules in business. And obviously it's a numbers game. But have you ever interacted with founders that found the numbers just to be lucrative, whereas they just want to sort of dive into the business aspect, and you have to have sort of a conversation with the leadership team saying like, folks, hey, there's a huge red flag here, right? So like we have to learn to take away a couple of things rather than just like go, because otherwise you won't have any tires to run on with your cars. So if you have any examples, maybe you could share with us.
All the time, especially with startups and small businesses, right? So anywhere from a couple 100,000 in annual revenue to a couple million, maybe even up to 5 million. the biggest thing is making sure that they're aware of all of their expenses, because when we talk about financials, we look at both cash accounting and accrual accounting, and those are very different basis of methods of financials based on exactly how their financials are structured. But it all goes back to timing. So if they're only looking at things from a cash basis, like the ins and out inflows and outflows, they're going to get a very different picture than if they were measuring it just based on accrual. And they're like, oh yeah, we're actually making money every month, or we're in a negative loss. They could be also, but they got to understand the difference, because that's the difference between having cash in the bank and not having cash in the bank. And then some companies have to go out and get working capital, get working capital loans, but that's also very hard to qualify for sometimes. Sometimes businesses can only get up to 5,000 or $10,000 at a time,
Right.
depending on their revenue. But if they're like a much larger company, like say 10 million, 15 million revenue, they may have more assets to get a working capital line of credit in the door. So it just
So
depends
yeah.
on what their assets are.
So if the entrepreneurs that are in my channel, let's say they're just about to break their 10,000 monthly, right? I would assume like that first mention of cash flow, like ins and outs, they would know how to calculate and sort of bookkeep to keep the balance, right? But the
Yeah.
accrual cash flow, I haven't heard that term being explained in like a grade 5 terminology. For someone that's starting a business and they have really lacking of financial terminologies, how would you describe it to them, like what that is and how that is so important to building their business sustainably?
Yeah.
Or
So
should that
most
be not even
businesses,
considered?
yeah. So most businesses are going to should measure their business based on accrual method. That's going
Mm.
to be the most accurate indicator of financial performance from a profit and loss basis. So when we're measuring profit and loss, we're basically measuring when the service is delivered to the customer or the client, and when those expenses, let's say labor, um, cost of goods sold, so like all the purchases that went into selling that product or that service, all of that is measured against the same period of time in which the the revenue was generated, or the service was performed. And so that's going to be the most accurate measure of how your business is truly performing. And so in accounting terms, we call that GAAP, for US GAAP, right? I think uh, even in international
Yeah.
standards, it's a very similar concept of, hey, generally accepted accounting principles, meaning that we're measuring our business performance based on when we sold products, when we serviced them, and when we actually placed those costs into service. And
Mm.
so that's the true measure of financial performance. And then looking at cash is very different, because it just looks at, at any given point in time, am I in a positive cash flow balance, or am I in a negative cash flow balance?
Could we park the car and just dive a little bit more deeper into what that would mean for, again, somebody that's below, and for someone your status, you're probably thinking it's like, oh, 10K and below is probably too little to play with. But I'm trying to imagine, so the person that's starting this, that's wanting to understand the accrual accounting. What are some of the things they should? So you explained about the gap. So let's do e-commerce. They're selling products online, and then by the selection of the products that's being sold, they get paid on a biweekly or monthly basis from Stripe, right? So
Yeah.
then I'm assuming for their inventory, and then purchasing the product, shipment, those are the costs and expenses that are going in. And from their perspective, I I wonder how you can frame it so that they can, rather than just, because I think what you're saying here is like, rather than just calculating the ins and outs, there's something more. Like you have to consider the gap. So is there an example that we can maybe use simple numbers to work through?
Yeah, I think it's a lot about timing of the expenses. So it's really about the matching principle. So matching the timing of the expenses with when the products were sold. So let's say this month, May 2025, we sell $10,000 worth of consumer goods, whatever that may be, right? And so accrual basis means we're looking at exactly the expenses that led to the generation of that revenue. So we call that cost of goods sold in accounting, in financial terms. And so cost of goods sold is basically, what went into the making of that product, which sometimes actually also includes labor. Sometimes we call that cost of labor if there was a direct labor involved with that revenue generation. So yeah, let's say it costs $5,000 a month between direct labor and direct materials. And so 10K minus 5K, you have a net profit of 5K. So in the general terms, gross margin, really. Gross margin, if you're looking just at revenue less cost of goods sold, cost of labor. And then of course, we also look at operating expenses, which are like software, insurance, rent, all those typical fixed expenses go into operating expenses. And so all of that, you calculate that, and then you get down to a net profit value. And so that 5K of gross margin then becomes more like 3K. So you're actually only taking home 3K every month, versus if you were just looking at your cash, you may have sold 10,000 that month, but you actually only collected $5,000 from the month before. So if you're looking only at cash, then you can only measure 5K less whatever you actually paid that month. Let's say you only paid $2,000 worth of your bills and you only paid your contractor $1,000. So then you only have $3,000 of cost of goods sold. And so do you see how it's very different if we're measuring the different time periods and the different basis of accounting?
So important because sometimes I think when business owners are getting started, if they have experience, that's great. But for those that are just starting out, they would just assume, oh, it would work out the first part that you were explaining into, actually the latter part. But it turns out it needs to be the first part, understanding
Yeah,
how
absolutely. And that's
the
usually
money
what
is.
banks look at. Yeah, for a small business that wants to get a bank loan or a working capital line of credit, they're going to be looking at it more from a gap basis, accrual basis, because that measures your
Right.
true business performance. I mean, they're going to look at your assets too, how much cash you have in the bank, what investments you have. They'll look at all of that, but from a performance standpoint, they're just going to look at gap.
In your experience and the trend of how people are now lean, like growing pretty lean with the newer softwares and ChatGPTs, do you find that there's a margin where that helps them to grow pretty healthy? Like, so if I'm a business owner and I'm listening to you, it's like, is there like I think it depends on the the vertical that we're talking about. But let's say for like online coaches, who majority of the times have a higher margin, maybe 80%, 75 to 80, and even greater. Is there a specific number that they should keep in mind to know that they have a healthy margin to continue to grow rather than to sustain it before growing? Was that a bad question?
So what I would do is I would research on ChatGPT, like what the standard metrics are for the coaching business.
Mm.
You mentioned 80%, right? As a
75 to
gross
80.
margin. Okay. Yeah, that's a pretty healthy number based on my understanding and experience of that industry. So yeah, it should be pretty high because most of the profit goes back to the owner or the coach. If they're a large business, then they'll have a lot more contract labor and salaries to pay, and so therefore their profitability might go down. But if in the case of like a one person coaching business or just a few, then that sounds more reasonable. And so therefore, most of the expenses are really just going to be operating expenses, like I mentioned, with software subscriptions, with rent if they have an office. But the majority of that should be a profit distribution back to them.
One last question before we sort of pivot the conversation to you and your journey. Are there any tips that you can advise to young entrepreneurs or newly entrepreneurs in terms of bookkeeping? Because from my experience, when I just started about two years ago, I had so many softwares that I forgot that I've opted into. And then only when the bills came in higher and higher, I was scratching my head. I'm like, what is going on? And I wonder if this is like a common thing that usual entrepreneurs would face. And is there more to it?
Do you mean like in terms of their bookkeeping?
Yeah. Are there any common bookkeeping strategies you can share or tips and tricks for the newer up and coming entrepreneurs?
Well, I would definitely say I would recommend actually investing in a professional bookkeeper early on. Because one, as entrepreneur, you want to focus especially on what you're doing and what you enjoy doing. And so bookkeeping is actually a very technical field. A lot of people get certifications in it and they get really good training. So I actually recommend most people to just hire a bookkeeper because it's really not that expensive relative to the time that you get back. Because what I've seen happen with a lot of business owners, new entrepreneurs trying to do their own books, is they mess it up, and they mess it up bad to where they're like, once they do decide to hire that bookkeeper, they're like, oh, I messed this up and I really didn't know what I was doing, so you're gonna have to re-reconcile this. With books, you've got to reconcile everything to the bank statements and to the credit card statements. And that's a lot of work and a lot of time, especially if you're a growing entrepreneur that, has a ton of expenses. And even if you're doing it just on Excel, tracking it on a spreadsheet, that's even harder. You're spending all your time there. So I actually do recommend, investing in a bookkeeper upfront and, going through that pain, um, or really just, avoiding the pain of having to re-reconcile everything. A lot of the expenses, could be miscoded. Some people don't understand, what is the opening balance equity account, like when you reconnect a credit card or you connect a new bank account.
Yeah.
There's this account that pops up called opening balance equity, and most bookkeepers will know exactly what to do with it when it pops up, but your regular business owner is not going to. um and the alternative, I think, is to just have that business owner take some training. There's some wonderful bookkeeping training courses out there. You can invest, maybe a couple $100, into that training. So maybe that's more cost effective for the entrepreneur if they're not willing to invest in a professional bookkeeper. But I see those as probably better alternatives than really just trying to do it all yourself and, spend that extra time that you could have been building your business or increasing your sales.
So even if you're a solopreneur trying to dive at this, trying to wear the badge of honor, you're saying it's like, no, no, no. Laurie says you got to get yourself a bookkeeper. Even if it means it costs a bit, it's going to save you a whole lot more and it give you the energy back to build your
Yeah,
business.
that's what I would number one recommend. Absolute number one option. But then the number two option is to invest in a training course.
Hmm.
And actually sometimes if you just YouTube has a lot of good information. So if I'm like stuck, for me, if I'm stuck on something in QuickBooks, I might just search on YouTube for a video tutorial of how to do something. Now, if the entrepreneur is willing to invest that time, then that's awesome. But if they're not, then you know, uh, I would hire that bookkeeper right away.
Yeah, for sure. And speaking of business development, let's sort of shift our conversation to you. And I think you have such an interesting journey. And I was so excited to. I was like, oh man, I couldn't because we had our initial conversation booked for I believe like 2 3 weeks before, but then like things happened, didn't work out. Now we're here, but I'm curious. You went through the traditional accounting journey, but something in you uh, shifted, and you went in to get a MBA at Duke, and you have so many experience with startups and so on. What was a pivotal point for you in your entrepreneurial journey when you decided, hey, just the traditional accounting way is good, but I want more? Could you share that story with us? Yeah.
So I've always been pretty entrepreneurial. When I was deciding on my college major, like I knew I wanted to do business because I always had an entrepreneurial side to me. And so yeah, I knew going to college that I wanted to do business school. And then once I got into business school, I'm generally good with numbers, so I decided to go with accounting, get my master's, get my CPA, work for a Big Four, um, and get all of your check boxes on your
Yep.
corporate resume, right? um, but after a certain point, you kind of just realize, hey, I don't love doing this. It's not like my end career. And so that actually led me, so I worked in the oil and gas industry for 7 years in Houston, Texas, where I grew up. And so I just wasn't satisfied after 7 years trying to climb the corporate ladder, trying to live a stable life. I actually decided to move out to Washington, the Seattle area, where it's like very techy, a lot of startups, a lot of entrepreneurs. And that's where I really got exposed to like new businesses and tech. And so that same time I was, getting my MBA as an executive. So I didn't have to actually live in North Carolina full time. I could, learn from the same professors that teach the regular MBA curriculum. But we have this global program where we basically travel once every 2 months, and then we get to do the same curriculum as the regular students. We get the same teachers, we get new like cultural experiences in different places. And so that really opened my eyes up to new opportunities, especially in um, entrepreneurial ventures, because as an MBA student you get exposed to new opportunities. And so I did the entrepreneurial curriculum. So I did a whole business plan for a new startup. Um, and then I went to work not long after graduating with my MBA. I went to work for a startup in that's based in Brooklyn, New York, and it was an education tech startup. So they help run all these like coding classes. They get you certified in like data analysis, SQL, and all that. And so I worked for them. And then we got acquired by a large Silicon Valley company. And it was a huge deal. It was like 80 to $100 million acquisition, right? And so that was a good taste of startup life for me. And getting the company to a place where they could actually be acquired, like making sure that all their financials were accurate and that they got audited by a Big Four firm. So I was an integral part of that team getting that deal done. And so when we got acquired, I was like, you know what? I can either move to California, work for this big company, or I can, start my own business because this is a great time to do it. And so I had already decided that I was going to start my own business. And at that same time, like around that same time, COVID hit. And it was crazy. Like, there was a lot of uncertainty during COVID time. There was the rise of remote work. And that all actually worked to my advantage in terms of building my business, because business owners were more comfortable with, having workers that were doing remote meetings and doing all their work online. And so it's during that time that I really increased my client base.
Now, up to that point, this question really comes to mind at the forefront, and it's partially because we're Asians, right? And before the company was bought out for 80 to $100 million, when you said, "Hey, mom and dad, I'm not gonna just do this job thing that you probably thought I was gonna do for a lifetime. I wanna go somewhere else, do the studying, and then just sort of change my trajectory." How was the conversation with your parents back then when you said that?
Honestly, I don't remember. I don't think it was a big deal. I think because at
Oh,
that point, yeah, at that point I had like done a lot of things in my life, had accomplished a lot at that point, had my
mm,
MBA, basically like a year in the background. So it's like I
right.
kind of already had a safety net,
Mm,
and in my profession, in finance and accounting, the jobs are plentiful, for someone that has a lot of skills. And so that's always something that I felt like fall back on. Now, but at the same time though, they're Asian parents are very conservative and they want you to have that safety net. I
yeah.
feel like my parents were very supportive, because I had a plan is the other thing. I think because I had a plan. And so you have to basically, calculate, how much runway do I have to basically replace my income, right? Because once you quit that job, you lose your income and you don't have that safety net of that paycheck every 2 weeks. And so you've got to do your own like financial planning and analysis and say, okay, what is my cash runway? And how many months do I have before I have to look for a full-time job again? And I definitely had that in my mind. I was like, I did all the planning and, thought about, okay, what do I need? What do I need to replace my income at that point in time? And so fortunately, I, had achieved that pretty quickly. But it was still hard work because it was like every day I had to go grind and like find new clients, do
Yeah.
marketing, right?
Mhm.
And that's a very different skill than the numbers that I was used to doing.
Yeah, and that's pretty cool. I think you're the first Asian that says, "Oh, my parents were cool with it." Whereas my other friends in the network, they would be like, "Man, I pitched them the idea, and they pulled out the belt, and they were right." But the difference was you were presenting numbers, whereas other folks, and myself included, we were just presenting emotions. And so I think that's a lesson to take away from here.
Exactly. Yeah,
Yeah.
exactly. You have to think about it as a CFO of your
Mhm.
business. Even if you
Right.
don't have those skills, when you start your own business, you should have a plan in place, right? Any
Hmm.
bank that's going to give you money, any venture capitalist that's going to value your company, give you money, is going to want to see a financial plan. And so, especially in a business that's like service oriented, like you want to know like how much are my margins, as we talked about gross margins, net margins, how much is my monthly revenue, and like what's my cash flow. So all those numbers are really important to measure before you start a business and as you're measuring your progress in that business.
So I know you have some exciting things coming up, but I want to touch on your company, Advanced CFO. Now, for those that don't know what a fractional CFO is, what would you say a CFO is? And then once we define the term, I want to get into at what stage and for a startup would they want to approach a CFO like yourself? So let's start with the
So
definition. Yeah.
yeah, so fractional CFO is basically someone that provides sort of strategic financial direction for a business. So a CFO is a very advanced financial thought leader. A CFO is not a bookkeeper, is not an accountant. They are, providing direction for the business, and they're doing forecasting. They're doing M&A activities for the business. So all the
And then you
strategic
think for
direction,
merger and acquisition, is that?
mergers and acquisitions.
Yeah.
Yeah.
Okay.
Yeah,
Yeah.
especially in the startup world, there's a lot of merger acquisition activity, especially in the beginning, and
Right.
as they're raising different rounds of money, and so
Mhm.
those are all very important things. And so the CFO is the one that guides the company from a financial strategic standpoint. And in terms of like the services, it goes down to, as I mentioned, advising and then helping the company raise venture capital, or family and friend fund, like seed round funding. It's also providing analysis on a monthly basis, so measuring the growth and progress of the company against the financial budget and the goals. Um, and then also doing forecasting, as I mentioned, a lot of it's financial planning and analysis for forecasting, the cash flow as well as the profit and loss, and then also modeling different scenarios. So there's another piece that the CFO oversees, which is understanding the impacts of different strategic decisions. And so if a company is going to raise $5 million, or are they going to raise $10 million? What is the difference? What's the difference in equity that they're giving up to the company, to an investor? That's all like very valuable to analyze.
It sounds like to the startup founder or the CEO, like you are like the second right hand man to seeing
Basically,
strategically
yeah.
how the numbers are going to plan out. So I'm
Yeah.
curious, in your experience, when people have approached you to work with your company at Advanced CFO, where are they in their journey? So like I have a couple friends who run up, they're doing startups. Some are approaching their 7-figure mark, which is great. And so, but I know that they don't have a CFO that they've hired on. But I wonder, like, when should be at the appropriate time for them to be like, no, let's bring this like Laurie on and see if we can sort of expand.
I've worked with companies that are zero revenue, just about to raise a seed round, all the way up to $40 million of annual revenue. So that it's very broad, and most of my clients are in software and SaaS space. But I do have, yeah, but I do have clients that, are in construction or in marketing services or other service-oriented businesses. So I've dealt with a very broad spectrum of clients. Now, when I would suggest they look for a fractional CFO, I actually would recommend it pretty early on,
Oh,
because, yeah, because there's a lot that is involved, like especially for a startup, you need someone that can provide direction for capital raising, as well as like how to strategically spend the money, right? So that that that's definitely early. I think for a company that is a couple $100,000, let's say like a solopreneur, making like $300,000 a year or something like that, I would also recommend pretty early on, just to work with a fractional CFO to at least get a plan in place. They don't have to work with them on a monthly basis, but if they can at least work with this
yeah.
fractional CFO to establish a plan
My
that they can reach, and like set the right targets, the right KPIs, and then
mm.
measure, like have a system that they can measure their progress against, I think that's very much worth the investment in the fractional CFO at that level.
Now, what's different between hiring a full-time CFO and what you're delivering in terms of advanced CFO? Because I think you did explicitly mention fractional. So, what is that different from just hiring a full-on CFO? And is this the trend?
Well, the cost is definitely the biggest difference, because a full-time CFO costs over $200,000 a year. Plus, you have to give them equity, right? Most CFOs are going to want equity, especially if they work full-time. And so the whole idea behind fractional CFO is, oh, well, I have the expertise to get you where you want to be, but I only charge you a fraction of that cost, and I don't take any of your equity. So from a cost standpoint, that's huge, because, in some finance functions, some companies, they don't need a full-time CFO. They can have someone like me that has the experience and get the work done and provide them the same value as if they had a CFO sitting in their office, 40 hours a week or whatever it is, right? So it's all about value, like time versus value delivered. And I think, I'm sure in my mind, that a fractional CFO can deliver the same value that a full-time CFO can in less time.
Mm. And
Yeah, and it certainly is the trend. It is a trend to have a fractional CFO for that very reason, especially as we have gone into a tech recession in the past few years, and also as they have pulled back the R&D credit, basically the R&D deduction was taken away from a lot of tech companies. That
right.
created huge tax implications and a huge cash flow problems for these tech companies. And so, if you can save on the finance function, then that's absolutely a way that you can be strategic about your cash.
Yeah, I even spoke to a friend who works on behalf of the government on the Canadian side because their tax return is like up to like 60, it's like 60% or higher, something like that. So I asked him, are people leaving Canada? And he was like, actually, people are coming to Canada because for that reason. But I didn't realize. And I only spoke to him at a birthday party at a daycare with my other kids. So I was like,
Yeah.
but yeah, it shows definitely the trend of where things are going.
Yeah, absolutely. Fractional CFO is very popular and in demand, especially in the startup and tech world, for various different reasons. One of them being tax advantages and just being able to reallocate your costs to a different function if you're able to save on the finance function.
Yeah. Yeah. And I have so many other questions and maybe I'll bring you on at a different time. But I think I want to pivot to sort of approaching the plane here. And I want to talk about the podcast you recently started. Not only are you running your own company, but you're also starting your podcast, which is pretty cool. It's called Built by Margin. And what was the reason for starting that podcast? Because again, I would imagine you're entrepreneurial, but you're like, nope, I want to pivot to this side because you probably see some return of investment.
So for me, I want to start Built by Margin because I wanted to talk to other entrepreneurs and businesses about how they've grown their businesses. I'm someone that really cares about the numbers, and I want to meet as many people as possible. And so starting the Built by Margin podcast was the best way to do that for me as another asset for me to work with. So I my inspiration was How I Built This with Guy Raz. Have you ever heard that?
No.
So it's a startup podcast where they talk to founders about how they built their businesses in the beginning, like before it got really big. And so I've always enjoyed that kind of podcast. And what I thought that podcast needed was more focus on numbers and strategic direction, which is why I came up with built by margin. Is
Built
like,
by
you
Margin.
know, exactly. And so I was like,
Nice.
we absolutely need a podcast that focuses both on growing a company and growing the numbers at the same time. And because,
Mhm.
I deal a lot with numbers, I'm able to ask a lot of those questions to those entrepreneurs and business owners. And the people that have been on the podcast so far, we're already just shot episode 8. It ranges from people that have, maybe just started like 6 months ago to
Yeah.
people that have been in business for years and have built multi-million dollar companies. And so you really get like a very like wide flavor of entrepreneurs on this podcast. And that's one of the reasons why I started the show, is because I wanted to meet all those people and to understand their journey and exactly how numbers impacted their journey as business owners.
I think that's such a strategic and smart move. And Laura, you're so smart. Like you're one of the smartest agents I've come to know. And what I'm taking away in terms of principle is you mentioned the word asset. Because majority of the people would think, oh, asset, housing, asset, stocks. But you're saying, hey, there's a digital asset that we can compoundly grow as we're doing these podcasts. But not only that, it fuels your ability to network and get to know each other on what they're working on. So I think that's really, really cool.
Yeah, absolutely. So I work a lot with coaches, as I'm sure you do too. I have my own coaches and mentors. And one of the coaches that I've been working with for the last 3 years, he basically said, "Hey, you're like an information broker now because you lead this podcast and you're able to ask these very successful people what they do and the why behind what they do and then the numbers behind what they do. So you're basically brokering information. And so that's why it's an asset. It's because you're a thought leader when you're a podcaster. You lead the conversation and you're able to create content that really sticks with people and that really helps inspire and encourage them.
Yeah. And I love, and I was gonna highlight this too. I love the fact that you say I love numbers, and I think people should love numbers too, because at the end of the day, you're growing a business to make more money. And sometimes people that I've seen are shying away from the numbers, but you're definitely like, no, let's talk about it. We need to embrace this, which is, I think, is phenomenal.
Absolutely. Yeah, you've
Yeah.
got to deal with the numbers if you're doing business. Otherwise, you just be an employee.
There you go. So as we land the plane here, do you see any development? I wrote this question down. How do you see the development of financial strategy evolving for personal brands and small business owners? And that'll be the last question for this podcast.
So how do I see
The
the
development of
brand
financial
evolving?
strategies, yeah, maybe with the AIs coming into the field, or as you mentioned in the podcast already, how they're relying on, rather than hiring full out CEOs, you can get fractional CEOs. Do you see any other trends that are coming into play in terms of finance
Definitely.
numbers?
So, yeah, I'm glad you mentioned AI because AI has really changed the way that we do business. And same thing with financials. Now, there is a certain extent to which the AI will influence the numbers, but they can never replace a human CFO. It can never replace professional judgment, right? I definitely agree that AI has made numbers easier. If you want to just plop in, a certain prompt into ChatGPT and ask about something financial related, you can certainly get the answer.
Right.
But if we're talking about like professional judgment, like a much more complex scenario, you still need a human CFO or CPA to make their professional judgment because it comes down to, professional ethics and moral judgment, right? And so I don't think AI can ever replace that, but I do think AI is very valuable in giving us more tools which we can run through, the chat GPT prompts and understand our financials better. I just don't think it can completely replace any of that. One other trend that I'm also seeing is the rise of cloud FP&A software, which I get really excited about.
What is that? Could you explain to
Yeah.
us what that is? Yeah.
So FP&A is financial planning and analysis. And so that's like a very broad term for what the CFO does, like corporate financial planning analysis, startup financial planning and analysis. And so the cloud software is basically a very advanced tech platform. There's a lot of different brands out there that I recommend that companies work with if they would like to have a platform like that. If they don't, or if they want to save on costs, they should just go with Google Sheets or Excel, right? Just build it from scratch. But a lot of the software companies I work with are already very tech savvy, and they want to have cloud FP&A software. So we've definitely seen the rise of that software over the last couple years, as AI has also helped to increase the efficiency of financial planning and analysis. I think we'll continue to see better software at cheaper prices because right now I still think the market is saturated and too expensive for the regular business owner that wants to just have their cash flow forecast but doesn't want to pay over $500 a month for this type of software subscription.
Yeah.
So yeah, there's definitely a lot of development in this area, but we'll see where it goes in terms of how it can help the business owner that is not wanting to pay too much for this type of service.
Yeah. I wonder if you can share a word of encouragement to those that, again, speaking to you is so exciting because you're forward thinking, you're energetic, and sometimes I feel that some people that are resistant to change for AI especially, they're like, no, I'm just gonna keep this job until I collect my pension. And you speak to a variety of people like software, construction. But if you were to give a word of advice of people that are closed-minded about what's coming up, would there be something that you would say in terms of like numbers related is as a business owner that's looking to grow but maybe closed-minded about using AI?
So I think the most important thing to tell people is to work on their growth mindset, right? I think there's a couple of books out there that have helped me think in this area. Um, yeah, definitely. There's definitely some books that have helped me to think more clearly about AI and embracing new technologies. So I would definitely encourage other people to learn more and open their minds to these new ideas. Um, yeah, I would definitely say that that'd be my word of encouragement, and also just to be open to technological change. So a lot of things that I'm currently, reading, whether that be on the news or in a book, I'm able to just really think about it and open up my mind to these new ideas. And so I would encourage other people to also just think of a new idea and implement that in their life every day. I don't think it has to be a lot, but I think if just one change, one small incremental change or action step, I think can get people to be more open-minded about enabling tech change or embracing AI, especially as it comes to financials.
Right. Amazing. Laurie, thank you so much for being on this podcast here. Um, where can people find you, and is there anything exciting that you're working on that you want to share with us as we wrap up this episode?
Yeah, so I'm on LinkedIn. So you can find me on LinkedIn as Laurie Chen, CPA, MBA. Also on Instagram. So those are my two main platforms. And then my company is AdvancedCFO.co. And then lastly, the other thing that I'm really excited about and sharing about is that I'm working on a book. So I recently got accepted into a book accelerator, and I'm starting to write a book about entrepreneurship and risk taking. Um,
Hmm.
so I've always wanted to write a book, and so I've had a lot of ideas in place, and so I put some thoughts together and have started writing. I
Hmm.
actually just wrote my inspiration story for the book, but really it's more than just exploring entrepreneurship and starting a business. It's really about the whole act of taking risks. As entrepreneurs, we take a lot of risks. Because we risk our stable income. But beyond that, like, we also take risks every day as leaders, as people in this world, that there's a lot of risks in place for us, from financial to health, in relationship. And so I actually go beyond entrepreneurship in my book, and I'm going to be talking also just about generally taking risks and what that means, and what does it mean to take risks, and what kind of decisions we make and how we should make them.
That is amazing, and I'm curious to see how the numbers aspect will give, because again, people gain confidence to take an action depending on emotions, depending on future outcome. But for you, I believe there's a narrative of numbers that I think risk taking perhaps can make sense. So I'm really inclined to read more up on that when that comes out.
Yeah, absolutely. No, you make a really good point. There's definitely going to be a chapter about the numbers. Absolutely.
Mm.
Just based on my background and the
Mm.
way that I approach problems, there's always something numerically backed about the decisions that I make, right?
Right.
And I think for anyone, numbers are always tied to the decisions we make. Nothing is purely qualitative. We always have a quantitative aspect to our decisions. And so, yes, I'm definitely going to be unpacking what does it mean to look at decisions from both a numerical standpoint and a thought standpoint, motivation.
When is that set to come out? Do you know? Do you have an idea? Or
So
people
the book
you? Mm.
announcement, so the book will be announced later this year. But in the meantime, I'm going to be showing clippets of it on my
Mm.
social media. So yeah, if you follow me on Instagram and LinkedIn, I will be posting my journey in writing this book for the rest of this year, and then there will be an official announcement at the end of the year.
So we'll have to bring you on for that book launch. I'd love to know more about that.
Yeah, that would be awesome.
Yeah.
I think it'll be great.
Yeah. Well, Laurie, thank you so much for your time. We've learned a lot covering from the bookkeeping as well as different tips, but not only that, just thinking broadly of like in terms of direction of how you should focus your time and energy when it comes to growing your business. So thanks so much for
Thank you.
being here. And then, yeah, we'll have you on for the next when you're about to release your book.
Great. Thank you.